you started this whole thing out very organically, just trying to find good investments for yourself. And then you found a path that worked for you and started sharing with others. And then out of that grew this company, this amazing company. So tell us a little bit about where you guys are now with Real Wealth Network, and where you envision taking it.
We're just so grateful right now. We have about 56,000 members, which is, again, 15 years ago, I didn't even have that on my radar. I had no idea. I was just trying to learn for myself. But like you said, I would talk about it, and it turns out I'm not the only one who wants to know how to have passive income. Who knew? So it grew very quickly. And then, I'm really lucky that my husband is the opposite of me. Sometimes, a lot of times we marry our opposite, and that can drive you absolutely crazy. We have managed to really use it to our benefit, where I was able to just kind of create this business out of nothing and bring in all these clients, and we were growing so quickly. But what I didn't know how to do was run a business. And he has a business degree, and he's a very detailed, organized person. So he came in as my co-CEO, and he has completely organized our company and systematized it. We have 20 employees. They're just wonderful. So that's kind of the next step, not the next step, but another way of creating passive income is by investing in your staff, investing in your team. Even if you're just talking real estate, then, investing in a really good CPA, investing in that really good manager. Don't nickel and dime your property manager. That's the person who's taking care of your assets. Be on great terms with them. Send them flowers. Send them gifts. These are the people who are on your team. And, that goes for your realtors and your agents, everybody. It really investing. In our case, we have investment counselors. We've got, our finders. They go out and find the properties. Our marketing people. We have, Rich in particular, has spent so much time investing in their growth and bringing them to be leaders that we're just looking to be on the board of directors soon, because they're doing everything. They're so good at it now. They're better than us at so many things. So that's really exciting. But we now there's a tremendous demand for new homes. Both from tenants and investors who just kind of want that. Well, first of all, insurance rates are very low on new homes. I didn't even realize that. It really brings the cash flow down. So you might be paying more, but you have less in repairs, and your insurance rates are way down in certain markets. So it actually ends up being a fantastic investment. And then you add the low interest rates today. So we have so many investors who that's just what they want, is new homes. Of course, we've got tenants who are lining up for those because of COVID. They want a nice, clean, fresh space. So we're super grateful, because I look at people like you who have been successful in multifamily, and I haven't. I've invested in 2 multifamilies that did not go well. They were really difficult. And I was always a little jealous that I couldn't figure that out, but I do understand single family. I understand building a portfolio. We have a fund, $5 million single family rental fund. And that's just, again, something I understand and get. And I'm just so pleased that it's been tested again. This is the second time. The first time was the Great Recession. And the strategies we were using then, we rode right through that recession as if it didn't exist. And our investors felt that they didn't lose equity, they didn't lose cash flow, they increased both. And here we are again in the weirdest recession that any of us could ever dreamed up. Millions of people losing their jobs, but the thing that people want more than anything is a clean home, a safe home. Safer at home has been the lingo all year. So the home has moved to this castle, quality. Like, you got to teach your kids there. You got to entertain there. You got to work there. You got to cook your own meals now. I mean, all these things we got to do at home that we never had to do, or we kind of got out of the habit of doing. I mean, even gardening. My gosh, I'm gardening now. These are all things that have become a priority, and so here we are. I'm proud and happy that the strategy that we've been doing, as boring as it might have felt all these years, and it's like, oh, it's just single family homes, it really has gone through another recession seamlessly. Our investors have made both cash flow and equity. the whole fears about this eviction moratorium, it didn't apply to us. We had a higher collections rate than ever. We've had a higher uh, uh, application, like really high quality applications, because so many people coming out of the big cities and wanting to get into the suburbs. And because we picked these areas that are really nice, really attractive, but affordable, it's just like it's a fundamental strategy that has now worked 2 times in a time when it really shouldn't have, you know?
So I'm curious before we wrap, where do you see us going from here in terms of real estate? I'm going to ask you to pull out your crystal ball and talk to us a little bit, because you've been in the industry for a while now and you've seen a lot. And I'm just curious to hear your perspective on that for the listeners who are thinking, going back to what I was asking before a little bit, like, where do we go from here? What do you think is going to happen in the next 6 to 12 months?
Yeah, that's the multi-billion-dollar question, right? I think there's the problem with any kind of forecasting these days is that nothing is traditional anymore. It's so manipulated, so manipulated. So unfortunately, a lot of this comes from above. Like, we don't have control. I can tell you that if there's a stimulus package, things will go smoother. I don't know if that's going to happen. There's a lot of people who lost their jobs or their businesses at no fault of their own. They're literally banned from having a business or working. So that's, not their fault that they're late on their mortgages, and yet the stimulus has not come. People can't live on $1,200 over 9 months. So I'm glad to see that the recovery, most markets did bounce back, some worse than others. Some of them, again, the markets that we have identified as great markets still continue to be so. Indianapolis is the #1 market that lost the least jobs. It may be because Eli Lilly is working on the vaccine and has been really involved in a lot of the biotech that's been important over the last 9 months. But whatever it is, FedEx, I think, is hubbed there. So they've been busy and they've got a new Amazon. But for whatever reason, Indianapolis was very hardly affected. And that was the same last time around. So we've kind of focused on these little linear markets. However, the bigger markets, New York, San Francisco, LA, Chicago, they're getting hit really hard. And I think that's going to continue. But we saw that coming regardless of COVID. It was too much, at some point things reverse. And when you've got high tech paying so much money for their office space and so much money for their employees, they were already moving to Austin and Seattle and Salt Lake and all over Orlando. So we already saw the trends that are happening now happening anyway, where people will be leaving those big cities and moving to more affordable places. So the strategy still works no matter what. So really, again, looking forward, we know we have a growing population. We know that we have a huge number of people facing retirement and wanting to retire. We also know that these poor millennials have been through 2 recessions. Just when they got out of college, they were faced with no jobs, and now they got a job and was starting to get on their feet, and bam. So we know that they're having trouble with affordability. So, the key is to just get into these areas where there are sustainable jobs, recession-proof areas, and buy affordable real estate in the path of progress. For us, we've gotten through 2 recessions through that. I think a lot of what happens is going to be out of our control in the next few years. And sadly, I'd like to think that it doesn't matter who's in office and that, it's a local thing. But if we see taxes go up, most likely that with the Biden tax plan, it will affect real estate investors. So, we'll see how that goes. But even with that, let's just say the 1031 exchange is wiped out, probably won't be, but let's just say that goes through and that taxes go up for the wealthy. Here's the thing that, a lot of people need to understand is the 1031 is just kind of, it's like incredible. It's an incredible tax benefit where you get to sell a property and buy another property and basically take, the basis and put it on that. That's a little unfair, honestly. So if the 1031 went away, well, guess what? We would have to pay capital gains tax. It's still one of the lowest taxes out there. So you still got to make all this money. You still would pay the lowest tax. So it's not the worst thing in the world.
That's a good point.
It's really not that bad, nothing to fear. It doesn't take away the fundamentals of real estate, which is that that you can buy an asset that the bank puts up 80% of the money for. You only have to put up 20%. And then you get somebody else to pay that loan off for you. Who cares about the taxes, right? That's in 10, 20, 30 years, you're going to not regret it.